Hey traders, this is Christian Farmer. It's Tropic Trader Group, and this is your end of day market recap for Thursday, November 20th. Well, that was a pretty wicked reversal that we saw. I'm going to discuss that, and I'm going to discuss kind of where we are in the market right now, kind of, what's going on. Are we washed out enough? Is there finally some fear in this market? We'll talk about Nvidia. We'll talk about what happened with that today, and just some of the moves. And if you've been watching my videos for a while, number one, you know that I've been doing this for a long time. I started my trading, going all the way back to when there was right when the dot-com bubble started, was when I started as an investor, and when I started working in financial services. And so I've seen a lot of different things happen in the market, but every once in a while I say, geez, that really, like today's reversal, being up as much as we were and falling apart like that, it's probably one of the biggest reversals that I've seen in my career in trading. I remember when I was trading on an institutional trading desk at Merrill Lynch. I've seen some reversals then, back in the 2008 2009 times, when there was something like announced where we started, the market was higher, and there was some type of financial announcement, some bank was having trouble, and then we'd immediately fall and just start heading south. So there's different reasons for these types of reversals that happen. But again, this is one of the biggest ones that I've seen. Look at the semis, for example. From the open, they're down 7% from the open. So why I do these videos, is because these markets are always interesting to me. There's always something that either you haven't seen before or you haven't seen for in a while. But every one of these types of either market dips, corrections, reversals like this, the circumstances are usually different. They're unique, but they also rhyme with other situations. So we're going to talk a little bit about that. And risk disclaimer in front of you. Everything, of course, that I'm going through in this video is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer there. And if this helps, if you like these videos and it's helpful, I appreciate it if you like the video, retweet it. That gets me, motivated to do these videos at the end of the day, and prepare and go over the price action with you. Let's dig into what happened today. So big reversal. I think a couple things. I said yesterday, I said this to members. I said, obviously Nvidia is a very important earnings report, but we also have this big economic data that's coming out too, like a whole bunch of it that we got Thursday morning, jobs data. And basically, like, some of the initial reactions to the job data, like, we rallied on that data at 8:30 in the morning. However, what I noticed was what I've been talking about now for a couple weeks. And what I've been talking about for a couple weeks is this market kind of got shocked, and people really didn't. So I'm going to turn my video off here so that you can see this a little bit better. But if people just kind of have been, I think what part of the problem is that people have not been picking up on some of the warning signals, because people have gotten really complacent in the bull market that we've been in. So the Fed coming in, again, this is back on October 29th, they came in and they said, I'll bring this back up. I'll bring this up from 1020 so that you can see how this looked. Now, again, this was the rate cut that happened on the 29th, but there was a 99% chance that the market was pricing in a Fed cut for the 10th. Right now, fast forward to today. So that was 99%. And again, I've gone over this, but I just want to rehash this a little bit. But now it's at a 35%, and that's the lowest it's been. Right. And to me, that's a pretty big change in tone, because since the Fed started cutting interest rates, they have not really backpedaled on that and said, hey, okay, we need to wait and see. We're going to hold off on that. That's what you have going on right now, right? And you have a lot of, as I mentioned, complacency in this market. So they've taken liquidity out of this market. Now, you may say to yourself, well, the market's rallied before when they haven't been accommodative. But we're dealing with what has changed over the last, since April, for example. We've had one heck of a rally. valuations have expanded dramatically, right? We've heard about that, over the last couple months, people have kind of put up some red flags and said, hey, valuations are getting really expensive. That's not too much of an issue if the Fed is accommodating. If they take away the liquidity of the market, things begin to mean revert. And that's kind of what you have going on here. Now, where is the mean reversion happening the most? Well, it's happening. Bring back my spreadsheet here. And the most speculative things, right? Bitcoin is getting the most attention, right? And today, maybe there's finally some signs of some market fear, right? I heard this. I'm not going to name any names, but I saw this several times on social media today. I actually heard it on CNBC today too, that the markets are rigged, and the markets, there's conspiracy theories out because prices are falling. And it's not just Bitcoin, and people have their eyes on the crypto market, because it's a dramatic move. But that's one area of speculation right here. Other areas of speculation are this, right? ARK Innovation, they invest in high growth without any worries about cost. That's down almost the same thing. That's down these things are going down neck and neck, 19% down for the month. For the month, only a couple weeks. Same thing with the IBD 50 ETF, right? High growth, right? These are your most expensive companies. High speculation. That's down 20%, right? So it's not just cryptos. So if your argument is that somebody's manipulating the crypto market, then why is the IBD 50 ETF down 20% too, right? This is a liquidity situation, guys. It's also, and what normally happens when you've got some of these corrections go on, market dips, sometimes it's one factor to start with, and then it becomes it's other factors. For instance, so if you don't think it's other factors, perhaps people are just not paying attention. And I think that's part of it, right? So when you have people come on CNBC and they say that the market's being manipulated, I've seen this now a lot of places. People have lost their discipline. They're not doing market analysis anymore, right? Their ego is affecting their judgment. And I see that running rampant all over the place, right? Look at this, right? So people are not picking up on these subtle things. Investors are holding this is the fund manager survey from Bank of America Merrill Lynch. It's one of the most widely read reports on Wall Street. Why do I know that? Because I used to work at Bank of America Merrill Lynch, and I used to have a salesperson who told me this. He's like, yeah, when I send this out, it's the most widely read report. Because people want to know what fund managers are doing, right? And what they think. This came out just this week. Fund managers are holding one of the lowest proportions of cash in modern history. Cash levels are 3.7% or lower, has occurred 20 times since 2022. On every occasion, stocks fell and treasuries outperformed. This is a pretty big note. But when I tweeted this out, I got mainly sarcasm, right? Sarcasm about this is a bull market. It doesn't matter. So it's the complacency that is killing people, and the fact that people are not doing their analysis anymore. They're saying bull market, things are great, and they're not picking up on any of the data points. So yes, 3 points. So what does this mean? Like if you're wondering low cash levels, right, that people have. I'm not talking about, by the way, money market funds, right? Money market funds are different than what people are managing, right? What people are managing means they're all in on the stock market. If they're all in, number one, they can't buy anymore. And number two, if the market comes down, they're forced to actually liquidate rather than buy more because they don't have any more cash on sidelines. Also, another thing that's been completely ignored, and I get it because some of these things haven't worked previously, but you heard about CTA selling. Like if we break a range, and I don't have the range, if we break a level, it's going to force CTAs who have been overloaded long, right? Overcrowded long, like they got to their like 99 percentile of their exposure. Right? So once you break a level, CTAs follow trends. Once the trend changes, they have to go out and start selling. Hence, that's why you're seeing the market action right now. Like if you're following along in the price action, I'll bring up SPY for the day. Anytime we try to bounce, we're getting hit. And that's because there are big sellers in this market who are liquidating. Hence, here, we ran right into this. We try to rally a little bit around this time. And right when we're looking like we're going to turn the corner, thump, you get selling. This is not market manipulation, guys. This is people who are out there who have to sell. Either their model says to sell, right? CTA model. Maybe it's hedge funds that are over leveraged, don't have any cash. And then we're falling very fast because there's no liquidity in the market. That liquidity is usually supplied when the Fed is acting more dovish. Hence, you've got a lot of people who are now rushing out the exits. Now, this market is kind of it's also very technical, right? I had tweeted this out this morning, and I said, "Hey, we're rallying right into resistance, so we might fail here." Now, full disclosure, I didn't expect this, but we know that every time that we bounce over the last couple of weeks, we're being hit with selling, and like some of the biggest bounces are happening when there's no volume, hence in the overnight market. All right, so that's one of the big issues. The other issue, we'll talk a little bit about Nvidia. Right now, I was really surprised. By the way, so Nvidia wasn't up that much today. Right, for as much as I saw last night, people were high-fiving, saying Nvidia saved the market. And I'm like, okay, it's up 5%. That's a good move, but it's not breaking out. It's just Nvidia's been kind of under pressure the last couple of weeks. Right? It's been kind of sitting on the support level, and it's bounced every time we've hit this 180. Right? See this 180 level? Using volume at price. 180, 180, 180. We've been holding it, and I've traded this a couple times when it comes down to support. I made some money on this. I tried again here, and I bailed on it relatively soon, and then I did not trade it here. But one of the things that really surprised me with Nvidia up about 5% is there was all these other AI companies that were up more than Nvidia was, and I said, and Bitcoin was rallying on what Nvidia was doing. And I'm like, man, this doesn't seem right. It doesn't, other stocks should not be going up. It means that Nvidia is too important to this market right now. So forget about like the bubble talk and all that. I don't find it, maybe you do, but I don't find it healthy when one company is dictating all of what growth stocks are doing. And I feel like Nvidia was doing this about 2 years ago, where whatever Nvidia would do, the market would kind of have that personality to it. Now, I think it's the fact that Nvidia is trying to save the market, and so many growth stocks are tied to this. That to me is not okay, let's talk about a more constructive market, right? When let's say if Apple missed earnings, do I think it would have brought the whole market down? No, it would have affected some companies. It would have affected some semiconductors. But the fact that you've got any of these data processors, any of these semiconductors, any of the uranium stocks, any of the power generation stocks are all tied to what Nvidia does. That's not a healthy market. And hence everything reversed. Nvidia goes down, and this was another thing too. I was like, hey, if Nvidia is going to start leaking, it's not going to be good for the overall market. So I don't know, I'm not an expert on balance sheet reading and about all the promises that Nvidia is making. Do I hope that all the promises that Nvidia is making about future growth and that their Blackwell chips are flying off the shelves, like, do I hope that they're being correct with that? I do. right? At the end of the day, I'm bullish long term. I want things. I want to hear good stories. I want to hear about that. But there was someone who mentioned this on, and maybe it was Michael Burry, but he's been kind of looking into the balance sheet and saying, you know what, this doesn't make sense. Some of which, and again, I'm not a conspiracy theorist. I'm not anything like that. But if someone like Michael Burry, who I think is smart, if he's going to bring up some points where it's not matching on the balance sheet what they're talking about, and clearly there's doubts for this to not hold its gains. There's doubts about what's going on here. What else? I mentioned complacency. Just so much complacency in this market. We heard about this a couple weeks ago, and again, I'm not a Hindenburg expert. I've never been somebody to jump on the bandwagon of the Hindenburg signal, right? But I do know I kind of read about it and heard what it means. And it means when market breadth is poor, when the market is going up and you're getting these really horrible breadth readings that we've been getting, it's not bullish. And for more that I studied about this, listen to people like Tom McClellan, who is saying, well, it's not just one signal. It's really not good when you start to see a series of these things. And sure enough, we've seen a lot of days where the market's been doing okay, going back a couple of weeks ago, but breadth was horrible, right? We've seen this. And again, so I'm just going to summarize. I know I've been talking about this a lot, but I get new viewers who come in, but this stuff should be hitting you in the face. And so let me bring this up. All right, here's the 4-week new highs versus new lows. Now, is it huge? No, but there's definitely more things that are making 4-week new lows in the S&P than new highs. Look at the last week, how the new lows have been picking up, and there's no new highs, right? So new lows are expanding. They didn't today, by the way, which is interesting. And new highs have been falling off a cliff. What about NASDAQ, right? That's the S&P 500. Look at this. Look at all the new low as the market was going higher. Look at all the new lows pick up. Right? When I tweeted this stuff out, most people ignored it. We're in a bull market. It's fine. Just completely ignored it. And so that's what I mean about complacency, guys. So let's bring us to where we are now. But that's what you have. That's why you have price action like this, is because everybody got really comfortable, right? They ignored the Fed that came in and said hawkish things. They ignored the breadth that was getting worse and worse. They ignored one stock being responsible for all of the growth and tied to everything. All these red flags, right, that you should be doing as a market analyst or a market technician have been largely ignored. What have I heard about? Well, seasonality is strong towards the end of the year. Yeah, that's true, but that's just one factor. And seasonality didn't work in September and October. So why is it going to work at the end of the year if it didn't work in September and October? I don't know. But all I heard was that we're going to go higher. All right. So I hate being negative because, like I said, I play the markets mainly on the long side. But so what else do we want to look at? Do I want to depress you anymore? I really don't. I really don't want to be depressing. And it's much more fun to be a market bull. It is. Here's what I refer to as the jaws of death. Again, this is not something that I feel like I'm the only one who's sending this stuff around. Right? Maybe that will change. This is low volatility. The white line is low volatility equities in the numerator, and the denominator is high beta. Notice what's been happening. Low volatility has been picking up. We saw the same thing back in here. And again, I'm not trying to say that we're going to get the same thing as April. I'm just saying these are warning signs, red flags. When you see something, say something, not ignore it. All right. Here's what happened back in here. Low volatility really started to pick up. We've had a huge rally. High beta has been outperforming low volatility now for like 6 months. What else? What about this? And again, I've been showing these every day for the last couple days, but nobody cares. Right? Because everybody is, it's the seasonality. We're going to go higher. We just ignore everything because seasonality says it's supposed to be strong at the end of the towards the end of the year. This is consumer staples versus consumer discretionary. Consumer staples has been picking up. So where do I think that we're going now that now that I've kind of gone over some of the problems with this market? Well, we've now broken my support level, which is 658.91. Yes, we got stuffed at resistance, top of value perfectly, almost to a penny. So regardless if you don't know some of these other things about the Fed and liquidity, the price action is all you need to know. Right? Rejected at resistance. We got rejected here too. And now we've broken through support. We're back down to here. And I see us maybe going down to 641. I don't really have any other support. Right? 644, 641. Unless we can get back above 658.91. So these VPOCs, you don't have to worry about them, but they do act as magnets the closer that you get to them. If we break back inside value, it cancels out like the magnetic draw, right? It's only when we break value. So that's about another 1.2% down, 1.7%. That's for SPY. Um, 571.77. Right? Same thing, by the way. Rejected right at the top of the value area. 611.75. Perfect. I mean, so again, this system that I use, volume at price, MarketWebs, so damn accurate that it amazes me how well the value areas do. Notice also high volatility expected. Right? This was built in by my colleague Weg Bagol, who programmed all of this. And he's done a masterful job with this. So next support down, about 0.8 of a percentage point, 579.41. And if that doesn't hold, then every time we're at somebody asked me this on Twitter, and it's valid because I get it. People are trying to learn. And they said, okay, so we get to this level and that means no more downside. And I said, no, it becomes a level of interest. You get to a support level. It becomes, you want to pay attention, right? Just like a couple times we bounce from this level, but there's no guarantee that we're going to not break through. If there's more, right? Here's another thing that people forget or they don't understand. Technical analysis is not predictive, right? But it will give you what I refer to as, how I use the MarketWebs. It's a roadmap for understanding risk, right? And you have to understand that in trading, you're going to take some chances, but when something is not going to work, hence you take the trade-off. So if you tried going long versus this support, you set your stop just below. And if it breaches, then you're out of your trade. Right? That's all technical analysis does. It is not predictive. Now, there may be some folks on Twitter that are trying to tell you that it's predictive, how great a setup is or whatever. Some setups work, some don't. Right? And that's why you have to have a plan to say, get me out of this. Right? And then we know, I haven't talked about IWM too much lately, but it's the same thing, but to a lesser extent is speculation. Right? It's just lower on the board in terms of Bitcoin, ARK Innovation, IBD 50, right? Smaller caps are further down. But again, we started to fall right after that Fed meeting, and it's a bit more dramatic. So where do I think we could go here is 226.05. I'm not really going to go over single stock names. I think what you're going to find is that consumer staples are going to hold up a little bit better. But does it mean I want to go long consumer staples? No. And I think you really have to be careful. Like energy, this is one of the last things I said in yesterday's video. I said, be careful of energy. The last time that we had a major market sell-off, energy tried to outperform. And then what happened? It got obliterated. So these are traps, right? So you have to be careful of this stuff. There's traps when energy tries to lead the market. It's usually not a good, it has not been a good thing the last couple go. So the point that I'm trying to make here is don't think that you could hide in some of these things that are showing some relative strength. At the end of the day, right, in a market correction, they all fall. They all get hit. Look at what happened with the memory names today. Smoked, right? Could be this is a market general taking out a market general. I don't know. Here's another one. This is an optical name. Light down 13% today. Right? These have been your best names. So, nothing usually gets unscathed. So now let's talk about the positives. If we do get a nice washout here of all that speculative money, right? All those folks that when the market goes down, they think the market's manipulated as you're seeing them. But by the way, some of the worst analysis, folks that are caught on the wrong side of the market, when they say that the market is manipulated, it's not manipulated. These are bad traders, right? They will start to yell and scream about market manipulation because they don't have any trading rules. They're not a disciplined trader. They probably shouldn't be in the market. Some of these people have a lot of followers, and people will believe this kind of stuff. The market is not manipulated. You are a bad trader because markets go up and they go down, right? We've been on a huge run. It happens. The market falls. Bull markets ends, believe it or not. Right? And then we regroup, and then the Fed usually will change their tone, usually when it's too late, and they'll come in and start accommodating again. There will be good setups, but don't get lost in this market manipulation, conspiracy theory. Again, these are people who have no idea what they're doing, right? But they've made money because we've been in a bull market. Not good traders. And these people will get exposed, right? But it's easier to convince your followers that the market is manipulated or some other conspiracy theory than having to tell your followers that you were wrong, right? It's all about the ego. And I've seen it since in my 25 years of trading, just different players. And some of them come and go, depending on how long their little conspiracy theory before they admit that they're wrong. Happens all the time. Don't fall into the traps of what these people are doing. Because at the end of the day, some of them run funds. They'll make the longer that you stay in these funds, the longer they get paid. Some of them get 1%, over 1% management fee in an ETF. So yeah, you stay in because you're like, they're going to find out who's manipulating this market. Meanwhile, they keep getting paid. They'll get paid. Don't worry about them. All right, guys. Sorry for the seriousness. Again, if you get out of the way and let these things kind of come in, there will be some great buying opportunities. But it is way too early to even be thinking about that at this moment. Have a great night, everybody. See you tomorrow.